Oh boy, here we go again. Back to work. Missed you guys last week. Sorry to leave you hanging. We're back to work here tonight. It's Monday evening. We're getting ready for Tuesday's trading session. You know me, I got a bunch of great trades setting up for tomorrow's trading session. I'm going to cover all my favorite trades in tonight's video. That way you get a game plan to make some money tomorrow. As always, we got a lot we're going to cover here tonight on this video lesson. Before we jump in and get this party going tonight, make sure you subscribe to our YouTube channel. I don't want you to miss tomorrow night's video upload. And as always, if you guys enjoy this video, do me a favor, hit that like button for me. I appreciate you guys supporting this YouTube channel. But enough of the intro, right? It's been a week off here from the news. So let's get back into it here. Monday evening, getting ready for Tuesday's session. And boy, does it feel great to be back here with you all here once again. Thank you so much for all the well wishes last week. I missed you guys last week. But let's figure out where the money is for tomorrow. NASDAQ, S&P, crude oil, get everything on our radar here tonight. NASDAQ is bearish. S&P is bearish. We have big moves down on the NASDAQ and the S&P. That tells me there are two very simple money-making opportunities on the NASDAQ and the S&P, the QQQs and the SPY here for tomorrow. Big moves in one direction. Pretty easy game plan. I'm going to talk about the game plan tonight throughout the rest of this video. Over on the oil is a little bit mixed here tonight. We hear from OPEC this afternoon. OPEC talking about reducing supply, tightening down their output, and that sends the market kind of jumping higher here. I think that 92 level is a pretty obvious target there for the buyers right now, but I've got my eyes on a breakout higher up around 94.5, 95 here on the oil. And of course, if I'm wrong about that, I wouldn't mind a nice reversal off that high as well. So I think there's plenty of ways to make money, whether you trade oil, the S&P, or the NASDAQ here for tomorrow. I'm gonna break this all down with my favorite trades here in just a few moments. Before we jump into each individual chart though, real quick though, let's make sure we all get on the same page for tomorrow. Tomorrow, of course, is a Tuesday. There are two big news events tomorrow. We get the PMI number at 9:45 and that new home sales number at 10 o'clock Eastern time. PMI number obviously is an inflation number, right? It's not the most important inflation report, but is definitely something we will be watching tomorrow morning in our trade room. And then home sales, right? Rates have almost doubled in the last 60, 90 days here as far as home lending rates goes. Will that affect the new home sales tomorrow? That's always a very good sign of consumer confidence in the market. So I would imagine those two numbers, 9:45 and 10 o'clock, are going to be something to pay attention to tomorrow. If you could only be at your desk for an hour tomorrow, I would imagine that 9:45 to 10:45 block might be where we get the best entries tomorrow morning in our trade room. And don't forget, we got some big news coming later on this week. We got a really big durable goods report. We got some GDP on Thursday. We've got possibly the biggest news of the week is that personal income number on Friday, and that's J-Powell, baby, speaking at 10 o'clock on Friday morning. So, boy, we have a busy, not the last week of the month. We got a little more left next week, but the last full week of the month, and we have no shortage of fireworks here for tomorrow. So 9:45, 10 o'clock. Also, too, we heard from OPEC about their, tightening down production to keep the markets balanced. Will we hear more of that tomorrow? That is definitely something we are listening in for as well. We're also watching things out of China. They warned us their economy is slowing down faster than they want. So China is in the mix right now. Obviously, Russia, Ukraine, and the energy supply to Europe is on our radar right now. And we'll see if we hear anything from OPEC tomorrow as well. So there is no shortage of market catalysts. We know 9:45 and 10 o'clock is the one we know about tomorrow. But you better be, again, tomorrow morning in the trade room, we'll be watching closely to see what other headlines we get on our news feeds. Back to our chart tonight. NASDAQ, S&P, crude oil's all ready to go. Guys, whether you trade one of these markets or you trade all of these markets like we do in our trade room, make sure you watch all the way to the end of this video because you'll learn something new through each chart we go over here tonight. I'll provide different trade ideas, different advanced tactics, and I like to save the best stuff all the way towards the end to give you a reason to watch all the way through. So grab some screenshots, grab a notepad, notepad. If you have any questions, drop the questions for me in the comment section below. I'll get those answered after we're finished. And let's jump right into it. We'll go NASDAQ, S&P, and crude oil. Now, keep in mind on the NASDAQ, and of course the NASDAQ could be the micro NASDAQ or the QQQs, but pretty much everything we talk about on the NASDAQ and the S&P, at least for tonight, are pretty much interchangeable. So we'll cover the NASDAQ first, but again, think about the S&P. All of this can kind of, can apply both back and forth from the S&P, the NASDAQ, and vice versa. This is a 4,000 tick chart here on the NASDAQ, 4,000 tick chart on the NASDAQ, if you're wondering what our time frames are. And what is the most important factor on this chart? Well, there are three key insights that are telling us where the best money-making trades are likely going to be here for tomorrow. First thing is the directional bias. Daily chart is bearish, 4-hour chart is bearish, 60-minute chart is bearish. This chart is bearish. There's not a lot of concern on that, right? We know we have a very bearish overall bias, and I'd like to try to find trades on the short side because that will allow me to get more bang for the buck, right? You'll get bigger winners when you go along with that overall bias, which is bearish right now. Second clue, which might be the biggest clue on this chart, is this really big move down. Now, anytime we see a big move in one session, we know that, especially in today's trading session, there weren't that many deep pullbacks. Normally what happens is you'll see a big move down overnight like this, and you'll usually get this nice juicy pullback, and you can sell into it for a nice easy, 1 to 5, 1 to 6, 1 to 10 risk reward ratio. We never got that today. You can easily see the bears, for the most part, bears were pretty much scalping their way down. You have to think a market like this is just waiting for any deep pullback right now to be sold into it. So again, NASDAQ and the S&P, I think that's the biggest clue, right? The big move down tells us wait for a deep pullback to sell into that pullback. And then once we get back down to retest that low again, the buyers have a chance now to gobble up what we call a double bottom reversal. So there really isn't anything wrong with playing both sides of this. We really want to focus again on selling into that deep pullback because again, big move down, no pullbacks here besides small ones here today. The third one, the spike in channel, really helps us define kind of where the pullback really should go here. Spike in channel, we spike down and we begin to kind of channel out from there. It's not perfect, but generally speaking, when you have a spike in channel, there's one place we know where there'll be a lot of bears waiting, and that's right up around where that spike and that channel combine. And so if I had to guess off the top of my head right now where the most amount of bears are waiting, I would say probably up around this area, right around that 13,100, 13,080, give or take a few points up there. That's where I would expect the most amount of bears to be waiting here. Now, our biggest challenge on this is we may not get that really deep pullback. I always tell my students, be ready for 3 types of pullbacks after one of these big moves, in this case, big moves down. The first one is a very shallow pullback. The second one is kind of a modest pullback. And the third one is really what we almost hope for tomorrow, which is a really, really deep pullback, right? 3 types of pullbacks: shallow pullback, modest pullback, or kind of typical pullback, or third is that really sharp pullback, which again is a bit scary at first, but it's the best one because it gives you the chance for that, risk 10 to make 60, risk 10 to make 100, right? Those are the types of trades that really grow your account like a weed, right? So knowing this is all happening right now, let's talk about those 3 different types of pullbacks so you're ready for it. Now, we know we're bearish. We know the bears want to go up. They want to sell it back down. Then we'll see from there if the buyers want to pick it back up and run it back higher again. The 3 types of pullbacks you want to keep on your radar right now. One is a shallow pullback trap. So I know I got that channel overhead, right? Let's say all we do is we get a really shallow pullback up inside this area here. We tap that 13,000. What's going to happen though is we're not getting that really deep pullback yet. So we can't be totally aggressive on this short. This is where you want to look for a trap entry. Now a trap entry is very, very simple. You want to let the buyers try once and then try to get back above that swing high. These are called trap entries. You'll notice we didn't really get any of those on the way down. So that's definitely possible here on a shallow pullback. Wait for the price to pull back. We go up into kind of the bare minimum of resistance. But again, it's not a huge pullback, so we have to try to trap in some of these buyers and really try our best to sell as high as we can. So repeat after me: shallow pullback, traps after a big move down like this, right? That trap entry and go back down to retest the low. Now, what would make our job a whole lot easier would be if we can get up into this channel high, get those buyers now to start thinking it's a reversal. Okay, one of the things I always tell my students in our trade room, when I tell them, hey, big move down overnight or big move down, let's wait for a deep pullback. And of course, the natural question now is, but how deep, right? How deep exact? How deep is deep enough? And the answer is this: right when that pullback starts to feel like it's a reversal, right when that little voice in your head says, oh shoot, maybe this is a reversal, they're going to reverse this, that's usually when it's time to start looking for a failure back down to retest low. So again, in this case, we get a relatively good pullback now. The buyers come in, they're not watching my videos, right? They're inexperienced. They forget this is a big move down with an overall bias. And once those buyers come in and try to buy off that moving average, think now, where are their stops? Right? At this point now, we have all of that momentum going lower. There's a big bullseye right back on that low to get back to that low again. The buyers are walking right into a trap, if you will. We know where their stops are, and our job right now is to sell right into those stop losses. The easiest money you're ever going to make in any market is when you have a nice bear move down, you can trap those buyers above the moving average. Now, speaking of the moving average, once we roll over now, don't be afraid to grab that first pullback. That first pullback is oftentimes even easier. So again, this is a failure setup into a pullback combination. Are you with me so far? Right? That's the modest, that's kind of the medium pullback. Okay, now let's talk about the one that we're all kind of hoping for tomorrow, right? Hopefully we can get that really, really deep pullback. Now again, this one will feel like a reversal, right? It'll feel like this thing's never going to stop going higher. But remember, bearish is the overall bias, and we have that big move down without any deep pullback. There'll be a lot of bears most likely waiting up top here. In this situation, watch this sequence closely. This is one of my favorite sequences. Now, as we go higher, okay, what's the problem? A lot of momentum now for the bulls, right? The bulls are not going to give up as easily in this point now. So this point, we let them try twice. We let them try once. We let them try twice. And the goal of this is just to let those buyers kind of exhaust themselves, right? Let them get it all out of their system. Let them dig their own grave, because then think about now where their stops are. Right? So deep pullback, we look for the 2-try failure. It's a small variation, but boy, is it important when it really pulls back like that, because again, the buyers are not going to give up without a fight on that deep of pullback. Now, once you get those bears trapped, the bulls trapped, and we sell into those stops, this is where the good stuff begins. Now, as we go lower, now we have all of that wide open space down below us, because the sellers want to go back to retest the low. Now, at that point now, draw a trend line off those new lows, bring it up around that high, look left, and find some traps. You want that trap. What I always say is you want that first test off the high of that channel, right? Makes sense? So again, we pop up, really deep pullback, trapping those buyers, 2 tries there as they pull back, as the market rolls over, right? And you're cashing your paycheck as it goes lower. Don't just sit there, find that new channel. And then as always, right, I want that first test. It could be a trap. It could be a failure. It could be a pullback combination. All the same price action setups that I teach you guys in our free trading course. And I know that most of you guys and gals watching this video right now, I realize that most of you have taken the free trading classes. You've learned all the failures, the traps, how to draw everything, and most importantly, when to sit on hands to avoid losses. But listen, if you're one of the few folks who haven't taken that free trading course yet, what I'll do is I'll put a little pop-up here for you in the upper right-hand corner. The strategy that I teach in that free trading class will get you into more winners. It'll help you avoid those expensive losses, and it will give you a ton of confidence in your trading because you'll have a game plan to follow. It's perfect for someone trying to transition into full-time trading. You're going to love it. So grab that link that popped up there in the upper right-hand corner. Grab that link. Get registered for the free course. There's hundreds of examples in that free class about things like 2 try failures into that hidden channel, and back down we go. That's the game plan for us as we go higher. Now, one more thing. What if we pop up? At what point do these buyers, at what point can the buyers be trusted, right? At what point can we start to buy this market? The best way to buy this market is going to be off that double bottom, right? That'll be the best way to buy this. But let's say, just for some crazy miracle, right? Something happens overnight. Again, it will be pretty rare that you see a big move like this completely reverse the following day. But let's say, for example, we do get up into that 1308, 13100 area. And we do get up, right? The buyers don't try and fail, right? And now they come in and they jump off that moving average. Now, if they come in and they can pull back, get the bears all trapped in, and the buyers can hold it and jump going higher, we call these 1, 2, 3 moves, or a 1, 2, 3 reversal. At that point, where do you think the buyers want to go? They want to go right back and take out that gap overhead. I'm going to mark a new channel. I'm going to mark off that high. I'm going to mark off that low. I'm going to drill down, find those prior swings. And like I mentioned before, I want to get that first test. I want to get below the moving average for a failure, get below a prior swing for a trap, and then grab that first pullback. Does that make sense? Right? So again, I'm not buying that first pullback back here. Right? I'm looking for the buyers once, twice, and short that thing going lower. But if the buyers can put together a miracle, right? Possible, not probable, but possible. If they can hold that pullback and really jump, then we go into buyer's mode now. We mark off that new channel at the high, we find that low, and we start finding that first test off that low. And this reversal is pretty easy because you know where they want to go. They want to go right back to that 13,250 here on the Nasdaq. They want to fill that gap, right? They want to close that gap there. And I'll bet if the buyers were to get this thing to go all the way back up, I'll bet that would eventually turn into a 1, 2 try failure and then roll over and go down from there. So I wouldn't be surprised. Again, probably not going to happen, but if we do see those buyers reverse this whole thing tomorrow by some crazy miracle, right? Once they take out that high, then we get that 1 try, 2 try. We rope in all the buyers, sell into their stop losses, and then grab that first test on the way over. I mean, in all reality, that would be a fantastic trade because now you've got that big wide open space going lower. I really like all those trades. I really like here for tomorrow. Now, here's the big question that I have. How do we buy it off of that low? And what if we keep going lower? Like, what's the game plan if we keep going lower? Why don't we take a look at the S&P? And we'll answer that question on the S&P. Now, over on the E-mini, right, the S&P, the micro S&P, the SPY, you can really trade any of those counterparts here of the E-mini. Remember, same thing applies here on the S&P. Shallow pullback, look for that trap, right? Modest pullback, failure, into pullback combination. Deep pullback to try, failure. As we roll over, we find that new channel and we hit it back down again. Nothing changes here on the S&P. And again, same basic idea too. If we do pop up and by some miracle the buyers hold this and jump as we go higher, we know where the buyers want to go, right? They want to go back and fill that gap at 42.28 half here on the S&P. I'm going to mark off that high, mark off that low, find those prior swings. That's the key, right? And then grab that first test, whether it's a trap, a failure, or a pullback. So everything I just mentioned on the NASDAQ, you can pretty much apply here to the S&P. Here's the big question though. What if we keep going lower? What if we don't get that pullback? If we don't get that pullback we want right now on the S&P or the NASDAQ, we have to basically wait now for more information. We have to wait for that deep pullback. So if we do end up continuing here to grind down here overnight, what I'll do is I'll keep moving these levels, right? I'll move that level down. I'll just keep on ratcheting this thing down here. I'll keep that channel marked up off the low, up around that high, and I'll keep waiting for it, right? So if it keeps on grinding down, really not a lot will change at that point. I'm looking for that shallow pullback with that trap. I'm looking for that deeper pullback, right? That deeper pullback with that buyer failure into pullback combination, right? Look for that on the way down. Okay, or if it really pops, right, which is going to be probably even more likely at that point, if it really pops up to attract more bears in, this is the one that's good, right? The 1, the 2, the failure back down, and then grab that new channel. Again, these are all very likely, even if we keep grinding down, just kind of methodically move this whole game plan down. And don't forget, tomorrow morning, we'll be in the trade room together tomorrow at 8 o'clock Eastern time, and I'll kind of walk you through all this, right, as we're going through it. Now, the next big question is how do we buy off this low, right? So now let's say we go up, right? The buyers get there, right? The buyers get there, they get trapped in. We get that short back down to retest the low. Mission accomplished back at that low. What do we do if we can get that short off the high? We retest that low now. As we always say, anytime we have a strong move in one direction, we know there's a bullseye, right? There's a mission to accomplish, right, for a retest of that low. So mission will be accomplished at that point now. Now, the question will be, can we get some sellers to come in and sell into these lows? What I always tell my students is it's very difficult to predict a bounce off that low, right? The better money in this situation is to wait for the bounce and sell into it. I mean, you could be waiting for a bounce all day long. It's very difficult to predict when these bear kind of grind markets, when they're going to bounce off that low. I'm not a very big fan of picking bottoms in a really bearish market like this. So it's not a very good strategy or very consistent strategy, reliable strategy, right, to pick that bottom. However, once we do get that bounce and we can get that short, then there's some money to make as we go back and retest that low. Oh, excuse me. Now, real quick, after we bounce off that low here, where do the buyers want to get to? They're going to want to get right back up to retest this high right there. Okay, so depending on how far the market pulls back, that's where these buyers are going to be hunting for right there. And to do that, all you got to do is wait now for the weak hands to come in. Remember, the smart money right now is waiting to sell high. Smart money sells high. Smart money sells at resistance. The dumb money, they sell low. The dumb money sells at support. The dumb money in the market, right? The weak hands, the inexperienced traders, the suckers in the market, unfortunately, right? We've all been there at some point. I was there at some point in my career. I'm sure you were there too, right? But the suckers in the market, they're getting in when all the professionals or the smart money money are getting out. So hopefully we'll see this thing tomorrow. Hopefully we'll get that short off the high. The bears will come in and try a couple times. Now, why twice? Because we're not a bull market. We're a bear market at that point. But hey, we've taken out that low. Let those bears try a couple times. Think about where their stops are. And this is a very reliable squeeze, right? A very reliable stop run for a move right back up to retest that high. Right? At that point, think about now what's going on. Now this becomes basically one big trading range, and the market will try to rotate back and forth from one side to the next. So we trap in the weekend sellers at the low, we buy into stop losses, we punch up into those highs, and now guess what? More bears are coming in. Let the buyers try once, let the buyers try twice, and we'll sell it right back down again. Do you see how the sequence works? We start off by focusing on selling that deep pullback. Once we go back to retest the low, we trap in the weekend sellers, right? The bears get trapped. We're buying into those stop losses. Right? We target going back up to retest that high. Once the weekends chase after, remember again, right? The smart money is buying at support. The smart money is buying at, right, buying low. Okay? This is the dumb money. This is the weekends, right? These are the inexperienced traders buying at that point. Okay? Let those rookies, let them wrap that rope right around their neck and use their stops, right? Use those stops as fuel. Okay, now let's say, for example, though, we go back up, the buyers hold that pullback and they blast, right? They jump. Okay, this is just like we talked before. If I can get above the moving average, hold the pullback and blast, right? With a real strong move there, now we're back to being a bull market. I'm not going to buy that first pullback, no. But if the buyers can hold it and jump, bingo. Now we know the buyers have controlled momentum. We know exactly what they're hunting for. You get a big round number overhead. You get that gap fill that we talked about before, right? So mark off that high, mark off that low, drill down, find those prior swings, and get that first test off the low of that channel. All right. Hopefully that makes sense. Is that making sense out there? Let me know in the comment section. And do you agree? Do you disagree? Right? Do you think something's wrong about my analysis? I would love to know what your thoughts are. Don't hold back. I would love to know if you disagree or if you agree in the comment section. Let me know what your outlook is on any of these markets, because I'm always listening. And being a professional trader means you got to be open-minded, right? You can't be committed to one. So I'm always looking forward to hearing what you guys have to think in the comment section below. But that's how we want to trade it: the long side, the short side, as well as if we go lower here overnight. All right, S&P and the Nasdaq are all set to go. We got the easy stuff out of the way. Over to oil now. Oil is definitely the most difficult of these three markets tonight because we are very much mixed. And the reason I say mixed is because, well, there are three key insights here. The first one, again, is that mixed bias. Look at a daily chart, look at a 4-hour chart, look at a 60-minute chart. You're going to see for the most part, we're bearish, right? But then you've got the comments out of OPEC here this afternoon, right? OPEC came out late morning, right, early afternoon here, and said, hey, we're concerned about this disconnect between the reality and what's happening right now in the markets. And it sounded to me like a pretty legit threat to tighten up the supply of oil. And so, of course, OPEC is kind of the puppet master, right, of the oil markets, because we don't produce any here in the U.S. anymore, at least nothing to help offset that information. And you've got the scenario in Russia and Ukraine that provides that real scarcity effect. So right now, what's very quite obvious here on the oil is they had that big move down, right, back here August 14th. They retested that low. The market ran higher. The bears, of course, came in. They defended that level, sent it back down, and this becomes basically one big trading range right here. And so at this point, you got to think the buyers right now have one thing on their mind. You got to think the buyers right now want to take out that high at 91.69. Okay, the oil market, which is very news-driven these days, loves to make $5 moves. So if we're sitting here at $90 a barrel right now, if OPEC continues to fan this flame tomorrow, then we know that 95 level becomes the next big objective for speculators as they push this thing higher. Now, we still have to worry about this overhead resistance, but I would imagine, though, if this market can push through that 91.5, 91.70 level, I would imagine 95 is the next logical objective here, because that is the next big swing high that we have here. So if OPEC gets their way tomorrow, they'll have us back to 95 here, and we'll talk more about how to trade this stuff here in a second. So we are mixed overall. The OPEC news, right, leads to that reversal, which basically tells us the buyers want to take out that high. And then you have what is probably one of the most important clues, is this spike in channel. We spike up and we begin to channel out. Now, we mentioned this on the S&P and the Nasdaq. Whenever we have a spike in channel, we know the base of that channel is usually where the most amount of buyers are waiting. And so we have to think at this point now, the buyers would love to get some pullback here, go back up to retest the high. Once we take out those highs, do we see a two-try failure back down? That would be nice. Or do we break out and hold and break out going up to that $95 a barrel? That is the game plan for what we know right now. Now, again, oil is very much news driven right now. So a lot of this will depend on what type of headlines we see overnight. But assuming nothing changes right now, I would love to get that deep pullback, trap in some of these bears, right, who are not paying attention right now with that bull momentum, trap in those bears who are trying to sell short off the moving average. Once they sell short, now we know exactly where their stops are, right? We can buy into those stops. If you're stuck short, the only way to get out is to buy your way out. It's a very bullish, it's one of the biggest reasons why my favorite way to trade is to run stops, right? It's the easiest kind of trigger, the easiest catalyst you're going to get for pretty quick winners. And so that becomes a failure into a pullback combination, right? So failure into pullback combo. We trap in the bears, use their stops as fuel. We know the market wants to go back and take out those highs, so we grab that first pullback off that moving average for that failure into pullback combination. Again, you'll see a lot of these in that free trading course I mentioned, linked up in the upper right-hand corner. Definitely grab that if I haven't convinced you to do so already. One thing to keep in mind, though, is if we do pull back right now, and if we don't get that failure trade, right? Let's say, for example, we pull back and we start to grind. Okay, this is very, very common in the summertime season when the volumes are a little bit lower. Anytime we see a pullback that begins to grind down like this, it's pretty easy. At that point now, this will kind of revert back to that bear market. We know where they want to go now. They want to take out that 86.28 low. And so if we don't get this thing to bounce off that channel, find a new channel off that low, bring it up around that high. See where I'm going with this? And then start thinking about where those traps are. You want that trap above a prior high. You want those buyers to come in. At that point, this is not a bull market any longer. At that point now, we're looking to rope in those buyers for a failure running lower. Make sense? Okay, so again, I'd like to buy off the low of this bull channel, but I'm watching very closely to see how we react as we pull back. If it pops and begins to grind down there, it's pretty easy. Look for traps off a new channel and then grab that failure as the buyers come in and try to buy off the moving average. That should be a pretty easy short there for us if we can get this thing to roll over. The more challenging part of this will be if the market goes higher here without pulling back. So for example, right, let's say we go higher here and then we pull back. At this point now, we pretty much have reached the objective there, right, for those buyers. So in this situation, because we are overall bearish, I'll flip it now into a two-try failure, and we'll try to make that run up from there. Make sense? So if they do take out that high, 91.69, and then they pull back, that's when we have a good chunk of that mission accomplished now for the buyers. And therefore, I want to give the sellers a little bit more option here to take it lower. Because again, they may hold that and run this thing lower here, and we're looking for that short, right, coming down from there. So that's going to be one small adjustment here if we do go higher. And again, think about this. If we were to go up, deep pullback, trap those bears in, okay, what do the buyers want? The buyers want to go back and retest the high. So now we buy into stops. We run back to those highs now. Now the weekends come in. They try to get long. Too late, right? Not a good spot to get long. And now we're looking to run stops and make that run back down again. This is that same situation that we mentioned before on the S&P and the Nasdaq, right? Makes sense? Okay, so again, we're roping in the bears, using their stops as fuel. Once we go back and take out that high, mission accomplished. Let the weak hands now come in. Let them try once, try twice. Remember, we're bullish at that point, so be patient, right? Let them try twice there. Don't just simply sell into it. Once those buyers get caught, though, then it's all gravy, right? Then we know they want to take out that low over there, and it's a matter of failure into that first pullback off the low, off the high of that channel for that dump back down to retest that low. Okay, those are some great trades setting up here for tomorrow here on the oil. And then again, because of OPEC kind of playing around with this stuff right now, you want to keep an eye out for maybe one of these three breakouts, right? So here's a couple breakouts to watch here for tomorrow. First one, strong move, shallow pullback, higher high in price. Traps, baby. So if this market simply gets lit up overnight, if we really start pumping this thing up overnight, right? Strong move, shallow pullback, higher high in price, that trap setup. These are pretty common and they work really, really well. So watch that setup. If it just blasts right through that 91.68, right, 69, and then again making our way up to that 94.5 level as we go. Another option here would be we take out that high, we pull back to the moving average, and we jump off the moving average. It's called 1, 2, 3 breakouts. We're going to mark off that high. We're going to mark off that low. We're going to find that prior swing, right, ideally, and grab that first entry, right, that trap, that failure, again, whichever entry setup that we get at that time. And again, think about 95 as the end result on that one. The last one, which is possible, will be a pop and grind. So we pop up, we don't get that failure off the high, we begin to grind. Right? We begin to grind. These are very common in summertime markets, especially when there's news involved. So mark off that high, mark off that low. Remember, draw the channel nice and tight off those highs. It's kind of the opposite technique of what we did on the S&P and the Nasdaq, right? Nasdaq popped and grinds down. Oil may pop and grind up. At that point, mark those prior swings, grab those. And again, I say traps. I love traps so much in the trade room. Traps, failures, pullback combos. It's all gravy, baby. It's all money making stuff off that low. It's whichever entry pattern we can get our hands on. Think about 95 as the objective as we go higher here. So 3 different types of breakouts going higher. We know how to trade this if it goes up and then pulls back, if it pulls back, if it fails. So I think we got a pretty good game plan all ready to go here for us here tonight. So that's the easy part, right? The easy part now is putting the game plan here for tonight. Tomorrow morning, 8 o'clock Eastern time in our trade room. If you want to learn more, I'll put all the video class links, all the trade room links. I'll put all the free course stuff right in the description on the video right now. So grab that link, get registered, and I'll see you tomorrow morning, 8 o'clock Eastern time as a student in our trade room. If not, we're going to come back and do it again tomorrow night. We've got a big week ahead of us here, and it is great to be back here with you all on this video newsletter. Now, get some rest. We'll see you guys tomorrow morning, opening bell. Until next time, if you guys have any questions, drop those questions, of course, in the comment section below. And don't forget, if you guys enjoyed the video tonight, make sure you subscribe, hit that like button, and we'll see you guys in the next video. My name is Joseph. Be well, be nice to each other, and be here next time, will ya? Adios, amigos. Bye-bye for now.